This is iBergamot with T-theory observations for December 2016. This video will pick up where the previous video left off, where I outlined how this 5-year study of T-theory was performed and what it's all about. And the last green T sketched in here approximately, but the end date worked out to December 8. That one ran out and it was a proper T with a cash build-up phase of declining advanced decline line, and there were definitely subnormal returns in stock market, and that followed by the period of excellent returns. And this is all in hindsight, of course. Now, T-theory was invented by the guy named Terry Laundrie, who used it for many years since the mid 20th century. Unfortunately, he passed away, and we no longer have his wisdom to rely on. In his obituary, he was called a bright, shiny light. For somebody who saw my previous video on a 5-year study, I explained how black line is advanced decline line for common stocks only, and the red line is a traditional New York Stock Exchange advanced decline line, symbol NYAD. There's difference in two plots, and we can absorb this difference since September, when common stocks only had a peak right here, then breakout and failure. Failure followed by another breakout. That was in common stocks. All issued did not exhibit this behavior. They also had higher high and then the breakdown, but then they just came to the same level and reacted. So maybe this is the last low for the center post of the T, and these will be 3 tops. The first top, which was right here, and that is true. The market just fell off the cliff. It was like 2-day affair, and that's it, and it's set. And this little blimp, my portfolio did not feel it. And then it was sideways, and many stocks fell, and I was buying some right here during the October bottom, and some before the election, and some before the election right here. Election was actually, the market bottomed before the election. So this Trump slump was followed by the Trump stump, and maybe there is a T in here, so let's see. A winter T projection goes like this: 3 tops, 1, oops, hold on, 1, 2, 3, and 2 center posts, the mid post and the last low before the reaction. Maybe this will create a stupid T, because common stocks only already broke out. That I don't know. Now, the first center post right here, that one already had 2 T's run out, pretty close to actual top just a few days ago. So these are good exits. Now there is a longest projection for January 3rd. That one still remains. Now the alarming thing about that is the last projected highs of the last T, that big green T. It had several of the projections. The last of them came in for December 8th. But the center post of new T cannot be inside the old T. The cash build-up and the rally can overlap, yes, but the center post cannot. The center post has to be outside. So if we had a top right here, the earliest possible top in September 21st, then yeah, that's fine. The market fell just like as we see it in New York Stock Exchange and also in S&P 500, and then it rallied. So maybe this is a valid center post, then we should expect next up to happen on January 3rd plus minus 4 days, 10% of the T. So this is a 41-day T. Plus minus 4 days is next week, by the way, or maybe right after New Year's. So that could be another top. Or sometimes these T's, they, oops, that's not the right one. See, one of the projections from the big green T from the first chart, the 2016 advanced decline T's with 2 double bottoms here in the beginning of the year. These were big T's, 170 to 200 days. But one of the projections comes dead on a low. Now, by that time, the advanced decline line was already falling for some times. I mean, you can say that this T is caving in. Both of them were falling. So the T may be a good projection for the buyable dip to the day, almost to the day. This is remarkable, because when this drop was happening, there were no indications of the bottom. You could not understand that this bottom was happening while it was happening. I was buying just on a prayer and general confidence, and that's it. And I had almost all of my buying done during September and October dip, so I did not have a lot of money to put away. Now I have profits, so that creates a whole different problem. It's a good problem to have. The next T, which center post located in the last low before the breakout, that one projects in the beginning of February, 3rd and 9, and then again February 24th, which once again, if this is a stupid T, this will cave into the bottom. Now, important to remember, from my rate study, the rate study was 2 videos ago, this is a projection for 2016 for the low of stocks. The interest rates at 30-year bonds fall from the high to the low the same amount of time that stocks, the same amount of time it takes from the low in bonds to the bottom in stocks. And there are 3 possible dates: February 27, April 24, and July 17. This is not exact. This is approximately plus minus 4 weeks, plus minus 5 weeks. So look, if the first bottom can come on the week of February 24th and it goes back 4 weeks, we're talking, what is it, end of January, beginning of February. So this already could be bottom made, and more possibly later on. My idea is this: the stock market is not going to go to the high. On S&P, we broke out and it raced. On New York Stock Exchange, we actually dipped under this trend line before we broke out. So this is not all cut and dry. And this is all could be a little bit wrong. But my idea is this: I have profits to take. I already carry 10 to 15% cash, which I can redeploy into clicks. I would like to raise maybe 30% cash to, I don't know, I have no idea what it will look like. I just know that there is a larger possibility of the bottoms, buyable dips to be made in stock market. I don't know at which level. It may be higher from here, it may be lower. There are already some sell signals coming in, and I have a full portfolio. I would love to raise at least 30% cash. Sometimes between now, beginning of the year, January is a whole. There are no indications of anything for January. No bottoms, no tops. What did they do with this chart? Oh my God. Hold on. All right. There are no indications for January, so I'm going to have to use other measures, which I have to deal with this. And this is not a forecast. But if I see advanced decline lines start caving in, I will know that maybe this one will project a low, or maybe one of these will project a low. And if it rallies, then I will know that one of these probably will project a high before it will project a low. I don't expect another update for the T-theory until beginning of new year. Thank you for listening. Come check out my YouTube channel for other videos. Go to my blog where I have updates on what's going on. This will be very, very exciting time. A lot of money to be made. Thank you. Have a nice day.